Gold prices surge in India. What does this mean for investors and the economy? Gold prices in India saw a notable uptick on Tuesday, according to data from FXStreet, a trusted source for financial market insights. But here's where it gets interesting. The price of gold climbed to 11,878.17 Indian rupees per gram, up from 11,854.89 Indian rupees the previous day. In larger units, the price per tola rose to 138,544.80 Indian rupees, while a troy ounce reached a staggering 369,452.70 Indian rupees. These figures aren't just numbers, they reflect a broader trend in the global economy and investor sentiment. Why gold matters: a historical and modern perspective. Gold has long been more than just a shiny metal. Throughout history, it's been a symbol of wealth, a medium of exchange, and a store of value. Today, it's widely regarded as a safe haven asset, particularly during economic uncertainty. Think of it as a financial lifeboat when markets get stormy. Unlike currencies, which can depreciate due to inflation or government policies, gold stands independent, a hedge against volatility. And this is the part most people miss. Central banks, the guardians of economic stability, are hoarding gold like never before. In 2022 alone, they added 1,136 tons of gold worth around $70 billion to their reserves, the highest annual purchase on record. Emerging economies like China, India, and Turkey are leading this charge, bolstering their reserves to signal economic strength. The controversial role of gold in today's markets. Here's where it gets controversial. While gold is often seen as a safe bet, its relationship with other assets isn't always straightforward. Gold has an inverse correlation with the US dollar and US Treasuries, two other major safe haven assets. When the dollar weakens, gold tends to rise, and vice versa. But why? It's all about diversification. Investors and central banks flock to gold when the dollar falters, seeking stability. However, during stock market rallies, gold prices often dip as investors shift to riskier assets. This dynamic raises a thought-provoking question: is gold truly a foolproof investment, or does its value depend too heavily on external factors? What's driving gold prices today? Gold prices are influenced by a myriad of factors, from geopolitical tensions to interest rates. For instance, fears of recession or global instability can send gold prices soaring, as investors seek refuge. Conversely, higher interest rates typically weigh down gold, as it doesn't yield returns like bonds or dividends. Yet, the most significant driver remains the US dollar's performance. A strong dollar keeps gold prices in check, while a weak dollar often propels them upward. This interplay highlights gold's dual nature, both a safe haven and a currency-dependent asset. Final thoughts: is gold the right move for you? As gold prices continue to fluctuate, one thing is clear: it remains a cornerstone of financial strategy for many. But is it the right move for you? That depends on your risk tolerance, investment goals, and outlook on the global economy. Here's a bold question to ponder: in an era of digital currencies and evolving financial markets, does gold still hold its timeless appeal, or is it becoming a relic of the past? Share your thoughts in the comments. We'd love to hear your take on this timeless debate.